All right, hi everyone. Welcome to our Monday weekly forecast. As we talk about the key fundamental news events to expect for the week ahead, along with their technical setups. Abu Bakar, nice to see you here, nice and early. Right? If let me know if you encounter any problems with the sound or with the video. Right? It's our first one of our first webinars today. Right? Hopefully you should be able to hear me perfectly well. Okay. Anyway, for today's webinar, what we're doing is we're going to be highlighting key news events. Kind of like central bank notes, key support and resistance levels to watch out for, right? And so that what we're going to do is we're going to touch a little bit for each major currency or each major commodity like oil or gold, right? We'll be touching on the fundamentals first, right? And then we go into the technicals, right? So there'll be a nice balance of fundamentals and technicals for us to look through. What I want to encourage you guys to do is that if you have any questions, right? If you have any questions at all, just send them right through. We literally have another screen open right here just to monitor your questions coming through. Okay. Now, anyway, this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets. Everest Fortune Group, an award-winning research firm, finalist for 2019, 2020, and 2021 for Best FX and Best Equity Research. Okay, so usually work with the major financial institutions to help them forecast where the markets are heading. And now we have a special partnership, with Vantage Markets, where I bring you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level. Okay. Now let's move on from here. Okay, so just really quickly meet the team, right? Of course, this is me, Desmond Leong. I'm the chief trader over here, right? You all will have been very familiar with Cassandra, right? She's not around today because she's down with COVID, right? So we wish her well. She should hopefully recover sometime this week to maybe come back for Thursday's webinar, right? And then of course we have our newest member, Viko, right? So she'll be doing the rest of the webinar later, right? So it's one of the first few times doing the Vantage webinar. So go easy on her. Second time already, yeah. Go easy on her, right? But yeah, so she'll do her best to answer questions along the way, right? Make sure you guys are well taken care of. All right. Now, moving on. Disclaimer, right? As usual, guys. Important thing to take note about disclaimers, right? This webinar is purely educational in nature, and nothing in this webinar should be construed as investment or trading advice, right? So please do your own little due diligence before trading, right? And later, especially when Viko is going through the technical analysis, looking at the chart, right? If you have any questions, just try to ask her, right? She's very versed in the technical analysis, right? It's fun as first. I think it's first few times doing the webinars, so yeah, go easy on her. Okay. Now, without further ado, I'm going to pass the time on to Viko now, right? And she'll share with you what happened in the US session, what it means for the Asia session, right? And then bit by bit, she'll be looking at each currency along with the technicals. Okay. Now, all right, Viko, over to you.
Thank you, Desmond. Hi, guys. I'm Viko. Okay, now today's we'll be talking about what happened in the market. So, what happened in the US session? So, US and European markets were closed on Friday due to the public holiday, Easter holidays. So, what does it mean for the Asia section? The developments of the war in Eastern Europe has gotten worse, so it's likely to give a safe haven assets a leg up during the holiday themed trading session. Hello, everyone. Okay. Now we'll be talking about the dollar index. So, what's the key events, news events, and what can we expect today for the next 24 hours buyers? So Fed Williams agrees to the options of a 50 pips hike in the Fed funds rate and warned that the central bank might have to set the rate slightly above a neutral rate to combat rampant inflation. So for the central bank notes, firstly, 7 hikes for 2022, with the FFRC reaching 2.75% to 3% in 2023. So secondly, inflation forecast for 2022 were raised to 4.1% compared to previously 2.7%. GDP estimates were lowered to 2.8% from 4.0%. Next meeting will be on 4th of May 2022. So for the next 24 hours, buyers will be weekly bullish. Yeah. Oh, yeah. Okay, let's look at the dollar index chart right now. Can see my chart? I guess you can see, right? I assume. So let's look for our resistance level and our first support level. Oh, we can see that there's a bullish channel here. So our first resistance level will be around here, whereby you can see that there's a 127.2% extension and also the 100% Fibonacci projection over here. And next is our second resistance level, whereby is here for the previous all-time high, and there will be like 161.8% Fibonacci extension here. Okay, let me show you where you can draw the Fibonacci extension for these two resistance level. You can draw it from here, the top over here, to the bottom here, to project here, to find your extension around this area. And next we will be looking at our support level. So we will place our support level around this area here. And we have what is it? Oh, this is a pullback support. Yeah, there's no Fibonacci level here. This is a pullback support. Yep. Price will have a bearish reversal from this first resistance level towards the first support level. So if it breaks through first resistance, it will go up to the second resistance level here. But most likely, price will reverse from this first resistance to the first support level. All right, let's look at the next currency. If you have any question, please type in this chat box. If not, I will proceed to the next currency. Japanese yen. So what's the key event and what can we expect today? And what's the next 24 hours bias for Japanese yen? So there's no major news event for today for Japanese yen, but the yen may see a brief safe haven reprieve from the inaction of the country's officials to address the weakening Japanese currency. For the central bank notes, dismiss debate on an exit from the current easy policy stance, and also expect inflation to rise to close to 2% in Q2 due to high oil prices. What currency pair should we avoid? I will answer your question later. Let me go through this first. So we also expect inflation to rise to close to 2% in Q2, right? Due to the high oil prices. So rates in Japan will remain low due to like higher domestic price pressures in the months ahead. And their next meeting will be on 27th April, which is probably it's going to be next Wednesday. Yeah, so keep a lookout for next Wednesday. So for for the next 24 hours, buyers will be mixed to weak bearish. Let's go to the chart and have a look at it. Okay, let's find our resistance level. So the first resistance level will be around this area, which lines up with 138.2% Fibonacci extension. The next level we'll be looking at will be the second resistance level here, which will be 161.8% Fibonacci extension. Let me show you where is that. So you can find over this. You can see a Nike tick over here. Yeah. So this is where we will be looking at for our extension level. And next we'll be looking at our support level. First support will be around this area, the greenish box here, which has a 100% Fibonacci projection. Why is it 100%? And next we'll be looking at the second support here. Okay. We will have a bias for a bearish reversal, same as the one earlier, from the first resistance to the first support level. So if it's break through the first resistance, it will be moving towards to the second resistance level. And we can see that there's a bearish divergence over this area. Yeah, this is a bearish divergence. And over this, using a RSI, you can see it here. Any questions? Other than the bank holiday? Okay, if not, let's proceed to the next currencies pair. Okay, next we'll be looking at gold.
Sorry.
Okay, can move now. Okay, now we'll be looking at gold. What are the key news events for gold and what can we expect today and for the next 24 hours bias? So there's no major news events for gold. What we can expect from gold is, with most major markets in the holiday mood, the directional bias on the previous metal is likely to come from the Russia-Ukraine front. Hence, next 24 hours bias will still be mixed to weak bullish. Okay, let's look at the gold chart. I think most people are more quite concerned with the gold. How does the gold move? Like just now, for the 24-hour bias, as we mentioned, is mid to weak bullish. So we can see from here that is going up towards our first resistance level here, right? So let's look at our first resistance level. So we can see that for our first resistance level, you can see a Fibonacci of 61.8% of the Fibonacci retracement, which is this line, right? From the top to the bottom here. And also we can see there's a lines up very nicely with 161.8% Fibonacci extension over this area here. These lines are nicely lined up. Okay, so so from you draw from the top here to the bottom here, and you get 161.8%. So you project it, you get this area here. And next for the support level is over this area, the greenish area over here, that you have is a pullback support level. It's a strong one. And also the next one will be the second support level. And it's also like considered a very small pullback support level over here. So our buyer is going to be bullish, right, from here, going up towards to the first resistance level, like a short bullish before it retraces back to the first support level. Gold bullish, zinc still high. Yes, gold is bullish, like a short bullish for now, before it retraces a bit back to the first support level. Or if you want, you can wait for gold to retrace back, and then you short it. If not, you can go in for like a long trade, just for like very short period of time. Okay, let's look at the next currencies pair. So for euro dollars, so what can we expect euro dollars for today? And yeah, what are our next 24 hours bias? So there's no major news event for euro today. But what we can expect from euros today is the maintenance of the dovish stance by the ECB amid elevated price increases in the bloc, and also globally remains a surprise for traders. Hopes are still for a rate hike after the APP went in Q3. Central bank notes they sped up normalization pace of APP to end the program in Q3, and end-to app should not be seen as accelerating, but rather as normalizing. And next meeting will be on 14 April. Oh, okay. But it's going to be the next 24 hours bias would be a weak bearish, sorry. So let's look at our chart, and if we seeing a weak bearish. Okay, you can see for now, by looking at our first resistance level, you can see we have a 38.2% of Fibonacci retracement level, where we get it from, okay, sure. Whereby we get it from here, this line from the top to the bottom here. We get a retracement for this area here. Okay. And next we'll be looking at the support level. So our first support level will be around this area, the greenish box here. And you can see that there's a 161.8% of the Fibonacci extension. You can see a reverse Nike tick here. Right. So for second support, as you can see for the price, really that there's no price level for us to determine our second support level. However, if you pull it back all the way back and trace it back, the past price level, let me show you. You can see that over here is 24. Is the lowest in 24th of April in 2020. So we'll take this as our second support level. So our bias to this will be bullish. So if the price break through this first support level, and it will reach the second support level here. But once it reach second support or it doesn't break the first support level, it's still going to bounce it up to the first resistance level. All right. Any question on this? Euro USD. Okay. Okay, let's look at the next currencies pair. Okay, what about dollar franc? So what can we expect from dollar francs today? The key news event today for dollar francs is the bank holiday. And what can we expect from franc today? It's a quiet day on the Swiss franc, can be expected due to the holiday stretching to the following Monday, which is today, right? So for central banks note, they kept all policies unchanged as expected. There are more concerns with the real effective exchange rate than the nominal remains very dovish and in no way expected to change anytime soon. They have a meeting which is on 29 April. It's also falling next Friday. And for the next 24 hours bias, we can expect a mixed. So might be like a bearish, might be a bullish, right? Let's see what we can expect from the TA on the charts. Now you can see that for the past few days, dollar franc has went up quite a lot, right? So we are expecting that it will go further out a bit to this first resistance level over here. And once it reach the first resistance level over here, we will be expecting that it is going to be a bearish reversal from this area. For our first resistance level here, we have lineups with 138.2% Fibonacci extension. Let me see. Let me show you, okay? So for this 138.2% is going to be over here. Right. So we project to 138.2%. And the first support level here, a minute. Okay. And the first support level here is 100%. Also for the 100%, let me see what we get. Yeah. So we're going to expect a bearish reversal. If not, it will break a first resistance level. Yeah. Okay, let's look at another the other pair of currencies. So for pound, there's no major news event for pounds today. But for the latest decades high, UK CPI is still expected to maintain expectations for at least another dovish hike by the Bank of England. For central banks notes, there's 25 pips as expected, but was not an unanimous decisions while Bank of England can't leave voting to leave rates unchanged. And next, inflation forecasts were upgraded to 8% in quarter two compared to previous 7.25%. And their next meeting will be on 5th of May, which is in 2 weeks' time. The next 24 hours bias will be a week bullish. Okay, let's see on the chart. So we are still expecting for a weak bullishness over this area. So price is going to continue to drop to the second support level here, which is in line with the graphical swing low support. And for first resistance, you can see that there is 50% of Fibonacci retracement. Yeah, we'll talk about the Australian dollars later.
I'll take over after your last one. Do one more takeover.
Okay. I don't know how to do the Aussie dollar. Okay. Yeah. Where is it? Okay. Okay. 50% retracement. Yeah, I stopped here, right? 50% Fibonacci retracement. And we're expecting the price to drop towards the second support level before it bounce off to the first resistance level here. So right now it's really bullish. Just wait till it drop to the second support for a bounce. Okay, now we'll be looking at the Aussie dollar. So the key news event for today for Aussie dollar is their bank holiday. What we can expect is the release of China's year-on-year GDP expected 4.2% as compared to previous 4.0% at their time 2 a.m. May disrupt an anticipated quiet day on the Aussie due to the Easter holiday. For central bank notes that they decided to remove reference to patience in terms of policy tightening. And also the financial stability report urged borrowers to prepare for an increase in rates. Their wage and inflation data remains the main conditions for rising rates. And next meeting will be on 3rd of May, which is in 2 weeks. The next 24 hours bias will be a mix. So there will be like probably a weekly like a bullish or either bullish or bearish. Okay, let's move on to the Aussie dollar chart. I think someone requested for Aussie dollar earlier. On the chart, you can see that there's an ascending trend line over here, right? So we are expecting that price is going to bounce off on this level, the buy entry level here, which will show the first support level here, which aligns with 61.8% of Fibonacci retracement and lines up very nicely with 161.8% Fibonacci extension. Okay. Okay, next, you can see that it's going to bounce off to the take profit level at 38.2% Fibonacci retracement. And if it doesn't bounce off at this level, there's chances that it might break through the buy entry level, which is the pivot level, and it will drop towards the stop loss level here, which is also the second support level. It lines up with 78.6% Fibonacci retracement. And right now, I'm going to pass my time to Desmond to carry on with this webinar.
Okay, guys, I hope you enjoyed Viko's webinar. It was it was one of the first webinar, second time doing a webinar. So she was we gave her about half an hour to share with you guys some of the key setups. I saw a couple of questions come through about the bank holiday thing, and of course also the request for Australian dollar, right? Just to expand a little bit more, on the on this Aussie dollar setup, right? So while we're thinking about a bounce from this level, on top of while we're thinking of a bounce from this level, we're gonna break it down to a couple of reasons. Okay, firstly, right? We can see that there's a nice retracement. If you take a starting point here and your ending point over here, right, as one big Fibonacci retracement all the way up, right, what you would notice is that there's a very nice 61.8 golden ratio kind of Fibonacci retracement right about where price is currently. Okay, you throw in a 161.8 Fibonacci extension, right? So how you do a Fibonacci extension is, the number might seem a little bit weird. It's not 161.8. Usually we are more familiar with 0 to 100%. So, but 161.8 is when you actually take something. Just imagine a Nike tick, but it's kind of like reverse, right? And then you come all the way down here. So your starting point is here, your ending point is here, reverses all the way down to the 161.8 over here. So there are a couple of reasons why it's lining up now nicely. There's an ascending support suggesting there's nice kind of bullish momentum, right? There's a 61.8. So this is the second reason. There's a 161.8. This is the third reason, right? And there's actually a pullback to this level here, which is the fourth reason. There are 4 different reasons why we're seeing a nice little kind of support over there. So we should ideally be seeing a bounce from this level, right? And we're not going to be too ambitious, right, in terms of take profit, right? The level you can play to, right? So we're just going to play the bounce to maybe the 38% retracement, right? So you can see for Fibonacci Fibonacci retracement, right? Your starting point is here, draw it all the way down to the ending point, and it retraces up to the 38% retracement, which is also like a pullback or kind of overlap resistance over here. So, playing it pretty safe with Aussie dollar, and that's the setup that we're looking at. Okay, I'll be moving on through a couple of the other setups, right? So if you have questions, please send it through. I know someone was asking something about gold, right? And sorry, the gold over here. We did previously call the breakout from this level is rising nicely, right? So the key resistance level, look at over here, is this first resistance. So all you need to take note of is that there's a nice Fibonacci extension here, 161.8, lines up with this little swing high where price kind of dropped from really strongly. So just take note that 2011 will be the level that we are playing to. Okay. Now let me touch on some of the other currency pairs that we're looking at from a fundamental perspective and also from a technical perspective. Okay. The next one that we're going to look at, all right, is the Kiwi dollar. Okay, some key things to take note of, right? Of course, in terms of news events, today is a bank holiday, so nothing much to take note of, right? But there's on Friday actually, upcoming speech by the RBNZ Governor Orr is scheduled after Easter holiday Monday, right? So in terms of the central bank notes, right, there'll be another meeting on 25th May. Not much really on the Kiwi dollar. So we actually kind of have a little bit of a mixed to weak bullish view on Kiwi, right? The important thing to take note of, is the correlation that it has with Australian dollar, because we know that the Aussie dollar and the Kiwi dollar are positively correlated, meaning that they tend to move in tandem with each other. One goes up, the other goes up. One goes down, the other goes down, right? So they are very strongly positively correlated. If we're thinking about it, right, in this case, Australian dollar, we're expecting a bounce, right? So Kiwi dollar, we should naturally kind of be expecting a bounce too, right? So look at Kiwi dollar here, and sure enough, we're kind of expecting a bounce. And I'm going to break it down to you, for you, why we're expecting a bounce on Kiwi dollar. Okay, firstly, there's a key support level over here. Okay, key support level over here. I'm going to put the first support level over here. Okay, secondly, there's a very nice retracement that I can't really remember, but if I'm not wrong, there's a very nice retracement all the way from the top down to here. Look at this major 61.8 retracement, right? Golden ratio too, same golden ratio which we notice on Australian dollar. So Kiwi dollar 61.8, and actually there's a little bit of an overlap kind of support over here, right? I'm going to remove just this 61.8. I'm just going to leave everything but the 61.8 over here. So it's worth noting, right? It's worth noting that there's a nice big reaction from here, nice big reaction from here, nice big bounce from here. So this clearly is an area of support that people are looking at. Okay, nice big support, nice big 61.8 retracement. Okay, on the shorter term time frame, right, it does not look that obvious, but there are different kind of Fibonacci levels and Fibonacci levels here. I don't want to dive too much into it, but I can show you really quickly how it looks like, right? You can take a Fibonacci projection, right, over here. I'm going to use all Fibs. You can see at 78.6% lines up very nicely here. Okay, important thing to take note. I can do a Fibonacci expansion, and I'm pretty sure, there you go, a negative 27 lines up over there, and one over here. You got a 127, or rather 138 that lines up over there. So I don't want to zoom in too much because that's the danger of the higher time frame. The more you zoom in on the lower time frame, the messier the chart might be, right? So if I just go filter, and show you that there is what you can see, or rather it's a little bit hard to see, but what you can see is that there's a major area of support over here. And that is why, we see that there's enough support here to call a nice little bounce, since we are expecting the same bounce on Aussie dollar. Aussie dollar expecting a bounce. And this is what I like about correlation, right? It is Australian dollar bouncing, and there's Kiwi dollar bouncing. That gives us more confidence that we are actually seeing the bigger picture of the market, right? A bigger picture of the market. Do a Fibonacci retracement from the top all the way down. I like to play minimally to the 23%, right? You can see a 23% retracement is just about this level over here, right? So this would be the resistance level I'm playing to, right? So I'm kind of looking for price to bounce up here. Not too ambitious. The same thing as Aussie dollar. We don't want to play too far up, right? We're playing a small bounce. The same thing with Kiwi dollar. We're just playing a small little bounce. In terms of the stop loss placement, it'll be a little bit tighter. You can put it about over here. This is where I might put the second support, right? This will be the first support. Okay, some things to consider, right? Some things to consider when you're trading Kiwi dollar. Now, let's move on to Canadian dollar. Okay, let's move on to Canadian dollar. I look at the fundamentals, look at the technical. So, fundamentals for Kiwi, we're slightly bullish. Same as Aussie, slightly mixed to weak bullish, right? It lines up with our technicals. So, that's, kind of, things are adding up pretty nicely together. Okay. Oh, now next thing I'm going to look at is going to be the Canadian dollar, CAD rather. For CAD, few key things to take note of. Key news events, right? Of course, it was a bank holiday on Friday, right? For today, the influence on the loonie, right, from the volatility of oil prices is likely to weigh. Although the replication of the moves may be mild due to the holiday, right? There's a next meeting for in terms of central bank notes. There's next meeting on 1st June 2022. In terms of the most importantly, what is our next 24-hour bias? We are a little bit mixed to weak bearish, mixed to weak bearish on the Canadian dollar. All right. So how does this look like on our charts? Right. How does this look like on our charts? We're going to pull up dollar CAD. Okay. Dollar CAD over here. I'm going to remove some of the levels. You want to say something? Okay, finish over here. Yeah. So some of the key things to take note of for Canadian dollar. Okay. There is big resistance here. Okay, strong resistance over here. Why is it strong resistance? Resistance over here. Let me just highlight this. Why strong resistance is because of this, right? Bounce, 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 bounce. Try to break and it bounce again, right? And when it finally did break out over here, you can see it's clearly an area of interest. Price react. It's coming back up here to react again. So it's clearly, a lot of resistance over there, right? And that's why we're highlighting that as our first key level of resistance. Worth noting, another level worth noting is that there's a descending resistance that kind of lines up pretty nicely. Not exactly there, but that you can see there's a little bit of bearish momentum that we're seeing on dollar CAD, right? And just let me maximize the chart. There's a little bit of bearish momentum dollar CAD. The only danger, right? The only danger is this Ichimoku cloud over here, which price has crossed over it, found support, and it's kind of bouncing up. So price is kind of like caught in between two levels now, right? We got a big resistance up there. At the same time, we got big support down here. Right? So in some sense, this is what I call like, you kind of need to wait for a confirmation level. You need to wait for a confirmation whether price breaks this resistance or kind of drops back down to a support. A good idea, right? A good idea would to play the range between this area first. To wait for a confirmation, wait for price to break off a level before we decide what we want to do. All right. So yeah, Canadian dollar not that great, right? Frankly speaking, it's not that great, right? Just kind of seeing it stuck between two key levels over here, major resistance and major support. And I'm pretty sure this major resistance is actually in line with a very nice Fibonacci retracement Here we go, all fibs. Oh, sorry, I need to take it from up here. There you go. We can see that this major resistance is not just any major resistance. It's a 50% of the entire move from here all the way down to here. Okay, very nice overlap resistance level. So I would wait for confirmation on either side, either a break above this 126.58 level or break below the 125.39 level to trigger another move, further down. Okay, so that covers the Canadian dollar for us, dollar CAD, right? We'll now move on, right? We'll now move on to crude oil. Okay, key things to take note for crude oil, right? Okay, of course, no major news events, but what we can expect from crude oil today, right? The European Union will formally propose a phase one ban on Russian oil products after the first round of the French elections on 24th April, right? So the black oil is also likely to face downwards pressure from the worsening COVID-19 situation in Shanghai, China, right? Because the country is the world's largest importer and consumer of oil. So for crude oil, just based on this by itself, right, we have a weak over the next 24 hours. We have a weak bearish, bias. Okay, and with this fundamental perspective that with a weak bearish bias, what does it look like on the charts? Okay, that's where we're going to come in and look at crude oil, and lines up perfectly, right? Fundamentally, we are bearish, right, and technically we're also bearish. Now I'm going to show you, right? I think it's very important not to just look at this and see that it's bearish. Okay, I'm going to explain to you why. How do we come up with this bearish forecast? Okay. Now, one important thing to take note is that price for dollar CAD, price did break out of this little bit of a descending resistance, right? So it's breaking out, failed to break out, and it finally broke out here. So it really took off from here, right? That's why we see actually price kind of exhausting the move a little bit. It has risen pretty strongly, but what you need to take note of is that it is now testing a pretty important resistance level. From a graphical perspective, where is it here? From a graphical perspective, there's overlap resistance here. Or rather, there's, you can see that price. What I mean by overlap, right? Always look for levels where price obeyed previously. If there's a bounce over here, there's a reaction over here, right? Price is coming up to here, is having another reaction. So this is what we call an overlap resistance. Very simple, support and resistance, it's an overlap resistance. Okay. Next thing to take note of, Fibonacci retracement from the top here. You can kind of see what's the entire move down here. And amazingly, right? And this is how these things usually happen, right? It's a nice 61.8 retracement that lines up directly at that level over there. 61.8 retracement over here. Okay, so now we got 61.8 over here. I'm going to leave 61.78. And we got overlap resistance. Next thing I'm going to look out for, right? I think Viko mentioned it a couple of times in the past, is the Nike tick kind of Fibonacci extension, right? So you're looking for this little, the why I call it a Nike tick, right, is because it looks very similar to a Nike tick, right? It looks like it comes down all the way here, then it bounces up all the way like a Nike tick, right? And what I notice is that there's a nice, I believe, I hope at least, right? I think there is a nice 127. There we go. A 127% Fibonacci extension lines up over there. Okay, so I'm going to put a nice little line over here. I'm going to put it maybe in dotted resistance line. I'm going to put a resistance line over here. Right, so we got a nice little bit of resistance over there. So we got 61.8. We got overlap resistance. We got 127% Fibonacci extension. We got 3 reasons why price is likely to reverse off there now. And we're going to throw in a little bit more. Right, we're going to throw in a Fibonacci projection, starting point, middle point, and ending point right here. And what you notice, the 61.8 projection lines up exactly there, right? This is kind of, Fibonacci is a little bit like chaos theory. It's a little bit hard to understand, but it's very useful and effective if you know how to use it properly, right? So now all kind of lines up very nicely over there, right? And we actually have 4 reasons why we might be seeing a very nice reversal from here. Right, we got the 61.8 retracement, 61.8 projection. We got the 127 extension. We got overlap resistance. We got 1, 2, 3, 4 reasons why price is going to reverse pretty nicely from here. Right, the confirmation that we need to trigger the move down is this support level over here. Right, this is called the pullback support. Right, and what is it? And it kind of is the level to sorry, I picked the wrong thing. It kind of is the level for price to break. So if price breaks this level, you can see price is already reversing very nicely. So if price breaks this level over here, it should trigger a bigger move all the way down. How low can it go? Right? It should ideally reverse to a previous area of interest about here. Right? This should be the ideal area of interest that it should reverse to, right? After exhausting its move up to here. Right, very very nice, very simple move. Right, it's very clear. What I like about oil, and I mean previously oil was a little bit messy, but now it's pretty clear that this could be the key move that we're looking at to push prices all the way down to the first support at 98.21. Right, I also do like to kind of take a look at the. Let me see if RSI is showing us anything. I remember seeing something on RSI. Yeah. So I'm gonna teach you guys an advanced version of RSI. All right, how to use it. All right. So there's this little thing. I'm gonna pick a vertical line and I'll show you where the big reversals happen for price. Okay. We got one here. We got one big reversal that happened over here. And you got another reversal that's about to happen over here. So you need to look at where what RSI is saying. We got one level here, we got one level over here, and got one level over here. Three different levels. Okay, and you take a horizontal resistance and you just draw it across. And what you notice is that this 66.7 level tends to be a level where RSI reverses and price correspondingly reverses. So this is a trick that we used to do in back at the my research firm when we're doing for the analysis for hedge funds and stuff. Right, we always look at, are there any hidden levels of resistance? Right, in this case, right, most people, they just see resistance on RSI 70-30, 80-20 or stochastic, right? What time frame is RSI more effective, right? So usually the the higher time frames has a lot less noise, right? So RSI tends to perform better on the 1 hour, on the 4 hour charts. If you're looking at the 5 minutes, you're looking at the 15 minutes charts, right? A little bit too much noise there, and it tends to be a lot less effective, right? So I tend to gravitate towards the 1 hour and 4 hour charts for RSI to be more effective. And that's the same for stochastic. That's the same for actually most indicators, because you think about it, right? Most people have time to look at the 1 hour chart. Most people have time to look at a 4 hour chart. Very few people have time, right, to be to dedicate. I mean, in the realm of traders out there, right? There's a whole bunch of them that can spend half an hour or 1 hour a day to look at the charts, and they would look at maybe the 4 hour chart, the 1 day charts, and maybe even the 1 hour charts. But if you're looking for people who trade the 5 minute charts, you're looking at people who are not. There are not that many people who can dedicate a whole day, to scalping, to monitoring the five minute charts. And that's why the smaller time frame you go to, the less effective technical analysis is, because there are less people looking at it, right? I mean, the market moves, there's a lot more movements, but there are less people looking at it because you just need a lot more time commitment to do that, right? So you notice that especially on the big indicators out there, right? The golden cross, the Ichimoku cloud, right? The trend lines, the overlaps, the stochastics, RSI, they tend to work a lot better on the 1 hour, even better on the 4 hour, and really great on the 1 day chart, right? That's the interesting thing about the time frames, how the time frames affect each indicator. I hope that answered your question, Barry. Not sure if your name is Barry Financials or Barry. Yeah, I hope that answered your question, man. But anyway, that covers some of the key setups that we're looking at today, right? And all right, you can see a question coming in whether the default setting is 14. I actually tweaked the setting a bit. This should be 34. Oh, this is 21. So I actually tweaked between 14, 21, and 34. Right. The reason for that is because different indicators kind of give you a different view. So if you think about it, no one ever said that RSI needed to be 14. No one ever said you need to use a 100 moving average. No one ever said that the RSI needs to use 70-30, right? So if you load a normal RSI, you load a normal RSI out there. Let me, I can't find it. Okay, basically the default settings, right? The default settings. Let's just say a reset settings. Yeah, see the default settings. You can see the default settings actually loads this version of the RSI. it highlights the 70 and the 30 level. But no one ever said that the 70-30 level was the correct levels to look at. And if we use this RSI as the default, you take a look at that, there was no way for us to find the hidden resistance level. Why? I'm going to zoom in for you really big over here. You can see that there was one reversal that happened over here, one happened slightly lower, and one happened slightly higher. But if you tweak this, right, to 21, right, you suddenly notice that they all line up pretty closely together over here. Right, I think I need to pick the levels correctly. Right, there you notice it lines up pretty correctly over there. So it's not about using 14 or 7 or any of the numbers that I give out to you. Right, there's no best number. Rather, the best number to use for kind of like stochastic RSI, right, this kind of moving averages, right, is to actually play around with the settings a bit, tweak it a bit, and see if they shows you any hidden levels. Right, in this case, 21 happens to be the hidden level for RSI on oil, crude oil, which gives us the best probability of a reversal, which, it worked out pretty nicely. And that's the way it usually works for this kind of indicators, right? Don't take everything at face value. Look, relook, question everything you see, even the 80-20 level on stochastic, even the 50 and 200 moving averages, even the the 100 moving average. Just play around with it a bit and see if you can actually find, maybe the 100 might not work as well as 90, maybe the 100 might not work as well as 110. Play around with it a little bit and you can uncover a lot of really a lot of different things, right? But anyway, that's it for me, guys, right? I'm just going to cover the last slide today, right? That's it for me, right? Thank you for tuning into this webinar. I hope you found it useful, and I hope you found Viko's session useful. She was slightly nervous, right? Being I think it's just the second time doing a webinar. I mean, she's good in analysis, right? But doing it live in front of everyone, analyzing the charts live, can be a little bit daunting for her, right? So I hope you still found the session useful, right? But anyway, in our sessions, right, every Monday for Vantage, we have a market wrap, a weekly market outlook, where you look at the key news events and technical setups for the week ahead. Every Tuesday is our topical session where we actually teach, right? Look at some educational topics and look at. Cassandra might not be back yet. I mentioned to you guys earlier, she's kind of recovering from COVID, right? So do wish her well when she comes back. All right. And then on Thursday, right? On Thursday, we will have our trading strategy clinic where we jump on, right, and you hammer us with questions on your strategy and we help you diagnose it. All right. Fun session, right? Advantage, are committed to kind of always giving you all the knowledge, not only the knowledge, but also the practice you need to become a better trader. Okay, so do check out the other webinars that we have, right? Join our Telegram channel. We try our best to update you on all the different webinars there. Subscribe to our YouTube live channel so you can actually see the upcoming webinars. All right, guys. Thank you, Barry. Thank you, Abu Bakar. Right, it's been a great session. Right, stay safe, trade safe, and peace out, guys. Peace out. Bye-bye.